TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. This is Billy Ray Valentine from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. As those of you that have been to Philadelphia know, that's where the banking scenes were filmed, right there at the Wells Fargo building on 100 South Broad Street. Been there many times. If you'll take a look at the chart that we have posted here, folks, this was from our good friend Peter Elides of Stock Market Cycles. He was our guest on Friday, warning of a pretty significant top being formed this coming week. And on Monday and Tuesday, this being Wednesday, we certainly had that happening, and we've had some pretty good volatility today. Now, what he was showing you here is the VIX index on the top, okay, and it's showing you when the VIX index is making a low. As you can see here, stocks are making a high. This is a way of measuring sentiment. And as you can see here, there was a high here, and 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 the one coming in right now this week. And all it was doing was making new lows here in the VIX index. That's why he said, you know, there could be a possibility of a correction here just because the sentiment is so different than what stocks are really trying to tell us. Now, those of you that follow the newsletter and stuff that we do here, the 24/7 service, you know that we had that beautiful ABCD in the S&P up there at 40.30. But look today, folks. I mean, this, you talk about a market that is just as perfect as you could possibly get. And I'll get it up here and show it to you just a second. This is the NASDAQ, which is the big daddy rabbit. Volatility, of course, being the high-tech stocks. But look at this, folks. You can see the perfect A, B, C. C's at exactly 382, one of our favorites. And look where it ends up, right here at the 1.618. Folks, do you know how close that came? 10 points. 10 points is where it came to on the S&P, or excuse me, on the NASDAQ. And, of course, we've dropped 150 handles from that level. We're all already way down in this area right here. So this is why we look at these patterns. Do they work all the time? Of course, we know that doesn't work, but they work about a good 65% of the time. And if you can learn to identify them, you're going to be far better off than if you're not going to, because it tells you the direction of what the market's supposed to be doing. If you're trading with the trend, you can see here the shorter term trend on the NASDAQ is very, very strong. The longer term trend is weak. You're trading an ABCD pattern right into this level here. There's your A leg right here. There's your B leg, C leg right at the 382. There's your 61% number right here off the top. So that is a perfect Gartley right out of his book on page 221, 222. He spent 2 full pages describing this pattern itself. Nowhere the place in that book of 600 and some pages did he take 2 pages to describe this pattern. And that's what lit my lamp up way back in 1972, 73, 74 when I devoured that book, learning that particular pattern. I wrote my first Gartley paper for stocks. It was called Commodities Magazine back in 1975, I believe. That's when I was getting ready to make my comeback, and it was a Gartley pattern that got me really excited, and I wrote that article at that time. I don't even have a copy of it anymore, unfortunately. Otherwise, I would share it with you. Anyway, it's a 600-page book. It was a loose leaf binder book. It wasn't bound. It wasn't printed. He only sold 12 copies at $1,500 each. But remember, $1,500 in 1937 was the cost of 3 Ford automobiles. You could have bought a brand new Ford for $500, so it was a very expensive trading system. I was fortunate enough to run into it 1971, and I've been talking about that book for a very, very long time. By the way, our guest today will be Jeff Huge of Alpha Insights. Tomorrow we have a new Cowboys coming back with us again, Michael Moore. He's been bullish crude oil for since he was on, which was 8 days ago. He's going to be our guest on Thursday. And then on Friday, we have Norm Winsky, and Norm has some really exciting things to talk to us about because we've got the Chinese New Year coming up here on Sunday. But on the 21st, which is Saturday, we have some cycles that Norm is going to be talking about that don't happen very often. And, of course, we had Mercury going retrograde direct today, which is always that's an 88-day cycle that we talk about here quite a bit. And so that's what we're going to be talking about with Norm. Now, let's talk about let's talk about the euro, folks, because we've been mentioning the euro for several times. Now, here's the euro over the last 5 or 6 trading days. We've been alerting people about this because we had something really exciting happening at that same time. So we're going to get this up here. This is the euro, as you can see here, over the past, that's just a 15-minute chart over the past 5 trading days. Now, what we were saying to our folks at 24/7, we are going to take out these highs right here. And that's where you want to be looking to be a seller of the euro. Say, well, how can you sell something like that? That's, that might not work. We don't know. I mean, all we know is when we put an order, when we do put a stop in, correct? We certainly do that. So what we're going to do now is we're just going to take a look at the euro, and we're going to show you why we think that is going to happen. And all I have to do now is to find it, and I know it's here somewhere because I just printed it. Okay, there's the printing, and I wanted to show you because I'm updating this as it happened because today was the time that it really looked interesting. Okay, now as you can see here, this is the same thing you're looking at on the daily. This is the 15-minute chart. You see all these highs setting up here? What we're waiting for is this magic little number up here, folks. The end of the old Fibonacci spiral, 1.618. We know at that level, and no other place on this chart will you find this, at that level, it is in granite, that if you get above that, you're in no-no land, and you can't be in that land if you're going to be trading Fibonacci spirals and pattern recognition using adequate risk management. But let's just show you what happened today when that breakout occurred that everybody was talking about on Bloomberg this morning about the big breakout in the crude and the euro contract. So you'll get this up here. Yeah, it was the Forex market they were talking about, not the futures. But there, look at that, folks. Exactly to the exact tick of the 1.618 expansion. In other words, you take that whole distance right here. There's your Gartley pattern, A, B, C, D, right there, stopping right where it's supposed to, right? Perfect A, B, C, D. Count the number of bars down. Count the number of bars down. There's your 1.618 expansion right here. The big breakout to the upside. Hello, operator. I don't think so. You can see what happened here. We reversed over $1,100, folks, today with a risk of about $200. So that's the kind you like to see that really you like to see. You don't see them all the time, but we were prepared for that. We were looking for that for several days. That's why I saved those charts to show you that these markets do have some predictive nature to them, and that's why it's very, very important to look at that. So that's what I'm trying to get across here each day. Now, we're going to take a little break here to pay a few bills. We've got bills to pay here, and when we get back, we're going to talk a little bit about the 3 stocks that we've been talking about here for a very long time, and then we'll have some fun with Tesla, Apple, and Amazon.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I don't usually follow stocks, but for the folks at TFNN and Tiger Den, we've been following 3 stocks. We had the big ABCD and Tesla ending down here at 109. The low was 102. We rallied up. As you can see, we got up to 134 today. We're looking at that 382 retracement there. It hasn't quite gotten there as of yet, but we've got the other 2 stocks that we've been following, and that is Apple, and then also we are following with Amazon. First, we'll do Amazon because that's the clearest of all the patterns that we've had of the 3 stocks. If you'll look here as we watch this daily chart of Amazon, it is as perfect as an ABCD pattern as you could possibly ask for. There's your A leg right here. There's your B leg. There's your C leg. There's your D leg. It measured to 82. The low was 81 3/4. We've now rallied up to the 382 up here, almost at 90. You can see this move right here at the 382 is equal to that move right here, which is 382. Folks, this is a down-sloping channel. We have lower tops, lower bottoms. Amazon is in a bear market, and the fact that if we don't get any higher than this 382 right here, we're getting ready to make another leg possibly to the downside. I'm just looking at it from technicals. The fundamentals are beyond my pay grade, so, and mainly because I don't look at them because they just confuse the heck out of me. I can read what the charts are telling me because if prices are going down, there's more selling, and if prices are going up, there's more buying. So let's take a look at Mr. Appel, who's down by the well. And here again, we're going to see a market that's done one of our favorite patterns, the old 382 retracement, right to the penny. And you'll see here, the last time we had one was right there. Now look what we just did. From that high right here, we've had a 10-day rally that has stopped right at the 382, which was 138 today. And that's been the high today in Apple so far. And I believe it's sold off given the fact that the rest of the market has. So those are the main things to look at. Now there's a big divergence happening in the stock market today. I'm sure you folks are aware of it because if you follow any of the patterns that we like, one of our most favorite patterns, of course, is the pattern of the market making a 382 retracement. Let's show you the Dow Jones this morning. This is the Dow Jones being up about 80 points today when the S&P was up 35 handles and the NASDAQ was up 150 handles. So the S&P, the Dow Jones was up about $300 in cash based on 60 points, whereas the NASDAQ was up 3,800, and you can see the market started to break from that level. Well, that leads to be a B, C, D move is what's that supposed to be, okay? So what we want to do now is we want to look and see what happened to that after the trade was put on, because that's where you really want to find out whether these things actually work the way you'd like to. They work all the time. We know that's not the case, but they work better than 65% of the time. And the key to pattern recognition swing trading is risk control. There's your perfect ABCD right at the 382 within 10 points of the Dow Jones, and now you've completed the big A, B, C, D to the downside, and we're breaking lower, so it's probably going to go lower yet, but that's the type of trade that you're really, really looking for. These are the kind that make you smile and happy, and you have very little heat, and it keeps you moving in the right direction, which is really good. Now, I want to switch gears here because we've got a trade coming up for a setup. It's not ready yet, but it's getting very, very close, and I'll bring this up to you so you folks can take a look at it. We've been talking about this for so long that I have to keep talking about it because we haven't been filled yet, but we're waiting for it, and it's getting very, very close. This is the natural gas, folks. This is a weekly chart on the natural gas. Now, all we're doing here is you can see the big ABCD right up here at the top, $10. That's what the ABC measured to, and look what happened after $10. From $10, it's dropped $30,000, $70,000 down to $3,400. Now look, the number of weeks down in the A leg, B leg, was 7 weeks. Rally back to the 61% retracement. The CD leg measures right down 7 weeks, and we guess where we are, folks. 1, 2, 3, 4, 5, 6, 7. Johnny's clapping his hand back there. Very good, Johnny. Keep up that arithmetic. You're doing good. So we've got equal time and price coming in this week. Okay? But in addition to that, if you remember from the Cycles program, we had a program by Dr. Richard Moore, Dr. Richard Smith from the Foundation for the Study of Cycles, and he shared with us, this was also shared to us by Larry Williams, but if you'll take a look at this, this is the 11-month cycle here in natural gas. And look what's happening. It's getting very, very close to bottoming somewhere in here. Now, here's where we have a difficult time with cycles. Cycles tell you time. Pattern recognition swing trading tells you price, but it also helps with time, because if you do some simple time counts in the ABCD leg, with the AB leg should equal the CD leg in time and price. That's what W.D. Gann taught as his, when time and price are equal, that's when the market will turn. Well, you can see here the cycle is getting ready to turn here based on the 11-month cycle that they look at, okay? But look at this perfect ABCD that we've got coming down here. Okay, now that measures to just under 3, and I just looked, and it's trading at 3,200 right now. So we're in the ballpark. The question is, they haven't turned the lights on yet, but we're certainly waiting for the entry point that will come in probably today or tomorrow would be my guess, to be looking at the natural gas, because it's got a really good chance to do something, pretty spectacular here. From a just change in trend from an oversold market to an overbought market. That would be the thing that we would be waiting for as we look at these things unfold today. There's one other one that's on our watch list, and I'm going to bring that to you because those of you that belong to the 24/7, you get these setups ahead of time when I do the videos each day. But as we look at this happens to be March soybeans. And we're almost making new highs, contract highs. We're not quite yet. You can see the double ABCD patterns up here. You've got the larger one right here. There's your A, B, C, D says we should get to new high ground. We've almost got there. We haven't got there quite yet. We're still up against this level right here. But I think we got one more little push up in here, and that'll complete both of these ABCs. And everybody be excited because they're going to tell you, oh, my goodness, we're making new highs. Look at this ABCD, folks. A, B, C, D. Absolutely perfect. Count the number of days from your A leg to your B leg, and from your B leg, your C leg to your D leg. It's perfect. A, B equals CD. That makes this a 3-drive to a top pattern. Drive 1, drive 2, and drive 3. And those are the patterns that we like to see, because we know at that point right here, that's the best time to enter. You know, when you go back and look at a chart, you say, where's the best time to enter at this chart? Well, look at soybeans down in here. Look at this right here. You see that bottom? Look at this. There's A, there's B, there's C, and there's D. And how do we beat? We pay some bills here for TFNN. 877-927-6648. Stay tuned for Jeff Huge, Alpha Insights.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we have Jeff Huge of Alpha Insights on the line again. I have to put a big congratulatory call again, my friend. You've said this market's going lower. And by golly, you're right again. The only thing you were really...
You're too kind. Thank you.
Well, you were right about one other thing that made me quite sad, and that is that Vikings can't win a playoff game. And I've been living through that with Rich for 35 years. So the only football game I ever went to was a Vikings game with him back in, oh my God, in all these years of professional sports, I've only seen one pro game, and it was with Rich. Oh, God, I can't remember. It was 81, 82, some ridiculous number. Anyway, listen, tell us, we're talking about market breadth here. What do you see, my friend?
Well, there's a cohort of market watchers out there, Larry, that start screaming about a breadth thrust every time we have an up volume day that's greater than 80%. I actually just don't see it. What you're looking at in this chart is two things. The top panel is the NYSE moving balance indicator. And if you're not familiar with it, it was really discussed by a fellow by the name of Humphrey Lloyd back in 1976. He wrote a book called The Moving Balance System.
Yeah, he was a doctor. Yeah, I knew who he was.
Yeah, exactly. So his point was that, you get this combination of breadth moves. It's the ARMS index combined with the 10-day moving average of the advanced decline and the 10-day moving average of net advancing volume. And then he's got an equal weighting of that, and he expresses it as a percentage between, basically 0 and 100%. And, when that indicator gets above 85%, that registers what I would describe as a credible breadth thrust. And from that credible breadth thrust, we get a buy signal that usually generates positive returns over the subsequent 12 months. The last time we got one of those was back in June of 2020, and before that, January of 2019. But the point is that a breadth thrust is an exceedingly rare circumstance that occurs only when the vast majority of common stocks rise, both aggressively and sustainably in utter synchronicity. And I just don't see that happening, especially with the NASDAQ market just kind of sitting down by its lows right now.
Well, this next one is going to be exciting because we saw this from Peter Eliades. He went into a little bit longer time frame, but this is blown up to really show the folks the danger that people were looking at coming in with that volatility. Peter spent a great deal of time talking about this, that these levels making new lows as stocks are making new highs, he said, has been indicative of the last 10 times. 9 out of those 10 times the market turned dramatically lower, and that's exactly what we're seeing today.
Yeah, it's true. In fact, we got a reading on Friday that was a 12-month weekly closing low in the VIX.
Yep.
That to me is a point where you need to really pay attention because, all the surveys say everybody's bearish, but the market is telling you that nobody's bearish. Everybody's afraid of missing the rally. And that's what the VIX is telling us at 18%. And the reversal that we're seeing today is really just, it was telegraphed by the VVIX, which is the lower panel in this chart. That's the volatility of volatility index. And as you can see, each point where the VIX gets down around 20% or lower, the VVIX tends to diverge positively. And we saw that in spades over the prior week as VIX collapsed into last Friday's low. And that positive divergence in the volatility of volatility index suggests that we're on the precipice of a volatility spike ahead. And I think it's underway as we speak.
Well, something certainly has happened. I don't think there's any question of that. But that's a great description, and blowing it up like that really is quite clear. So thanks for sharing that with us. Now, the next one we're going to be talking about is, I guess this is football stuff, defense versus offense. They say defense wins games, but we'll see what happens. Offense wins the money. That's what I heard an announcer say over the weekend with all the scoring that we've seen. Go ahead on this chart. What are you looking at? This is a game of attrition, I think, Larry, going forward. What we're looking at is a 15-year chart of the ratio of consumer staples versus consumer discretionary. And when that ratio is going down, it means that staples are underperforming discretionary. And when it's going up, it means staples are outperforming discretionary. And effectively what you're seeing is that people are buying the things that they need instead of the things that they want. And that is indicative of defense versus offense. And so, we're in an environment where we put in late 2021 a structural low. And the reason I call it a structural low is that was a deep low that was unconfirmed by momentum. In fact, momentum made a higher low, posting a positive divergence, a multi-year positive divergence, which is structural in nature. And it suggests to me that this bottom will not be challenged again for a very long time. In fact, the reversal that we've seen in 2022 is a bearish to bullish reversal pattern where we reversed above a 14-year downtrend line and challenged and subsequently broke out above structural chart resistance,
which is now structural chart support. And so we've pulled back in the last couple of weeks, and I expect that support level to hold and act as kind of a trampoline for this ratio to springboard higher. I expect staples to continue to outperform discretionary going forward because we are definitely on defense right now.
Okay, now staples are the things that people need, right?
That's right.
Like food, water, gasoline, electricity, clothes.
Yeah.
Yeah, okay, got that. All right, because I know so little about stocks. I know Coca-Cola does, of course.
Going to Walmart instead of going to Best Buy. Think of it that way.
I've never been to a Walmart yet, but I'm hoping someday I will. Let's get up here and I've been to Walmart. I think everybody's been to Walmart just to see the people. Okay.
You bet.
The next one we're going to be looking at here is your Elliott wave, which is always interesting because you certainly nailed the situation on this for quite some time now. So you want to tell the folks what we're looking at here?
Sure, absolutely. So this is our primary degree count, and we're really looking at two valid counts here. The one on the left is our preferred count. That's the one we think is underway right now. And the reason it's our preferred count is basically we counted 5 waves down from that January high last year, and we think that's primary one of a 5-wave decline that is underway at a larger degree of trend. So if that's the case, we've already seen intermediate waves 1 and 2 trade out, and we're in the midst of intermediate wave 3 right now. We're minor wave 1 and minor wave 2. The next one down is going to be a third of a third wave decline, and it should be very powerful, and there should be no uncertainty about what's going on. Now, if we are wrong about the preferred count, then it should trade above S&P 4101, at which point that breaks the count. It moves us to our alternate count on the right-hand side. And that suggests that rather than that June low being the beginning of a big primary wave, 5-wave decline, it might only be wave A of a smaller ABC, which means that everything that we've seen since June is actually a corrective waveform known as a flat. And so the rally into the August high was wave A, the October low was wave B, and now we're in the midst of wave C up, and that could carry as high as, say, 43.25 to 45.64 before it hits the 7.86% retracement. And when it's complete, we would count that as either wave 2 or wave B, depending how the next wave trades out. Either way, the next wave is down, and we think it's going all the way down to the mid-2000s.
Wow. Okay. Stay tuned, folks. Jeff Hughes, Alpha Insights. More to come. He's got some great charts. Stay with us.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Jeff Hughes, Alpha Insight, and he's talking to us about short-term Elliott wave model. So this one looks really clear to me. Looks like we're going lower.
Yeah, I have to agree with you. And here's the thing. This is a shorter-term view of what we just showed you, our preferred count. It's at an intermediate degree of trend. We're looking at everything since August 16th at a 4-hour range chart. So, what we have is the decline into the October 13th is intermediate wave 1 down. The rally into the December 13th high, that was intermediate wave 2 up. And then the decline into the December 22nd low, that was minor wave 1 down. And everything since December 22nd has been a corrective waveform. We're counting it as a triple zigzag, WXYXZ. That is, if it topped yesterday, and I believe it has based on today's price action, because we took out that you can see a rising wedge kind of traced in there. We took out that lower trend line. Yeah. So that confirms that minor wave 2 is done. That topped yesterday, and we are in the midst of a third wave decline that should carry the market considerably lower. Our target for intermediate wave 3 down is 2440 minimum, or I should say, kind of in that range basically. But ultimately, we think the wave A decline will carry to about 2250 on the S&P before it's done.
Well, that'll be a 50% retracement off the high. Jeff, I hate to be naive, but what were all those alphabet WXYZs? What was that? I'd never seen that before. What does that mean? That's
just R.N. Elliott's way of describing the trade. So we're looking at every 1, 2, 3 up. That's A. Then an X wave 1, 2, 3 up. Yeah, that's how he comes up with that.
Well, Elliott and I were born on the same day, different years, of course, but we were born on July 28th. So anyway, let's, Prechter named his son Elliott. Of course, he should have after all the business he's done through those years. Okay, let's move on to the next one. That I love these charts because, I'm being a technician. You do such a great job. Now, this is a stock that we're going to be looking at. No, this is gold.
Well,
this is a ETF.
Yeah, this is the GLD, the ETF that tracks gold. That's good. And, we do this publication called the Idea Generator Lab. It's our top actionable trade idea every week. We publish this for institutional clients on Wednesdays, and we also include our newsletter subscribers that are paid subscribers, so they get this report every Wednesday as well. And it just gives you our best idea looking at everything out there. And I love to come up with ideas where you can make a lot of money, where there's high confidence. It's a fat pitch. And so what we did is we identified, again, using Elliott wave principle, a move here where that fourth wave, that primary degree fourth wave ended back in September, October timeframe, and we've been anticipating a big breakout. And a couple months ago, we got it with this move above 168. And so we're of the opinion that gold will carry to a new high that would be above 195 on the GLD. Now, we've got a couple of targets in mind. if we're thinking about gold, the commodity, our range is about 2,400 to 2,500 is where we think gold can get to. And that translates into around, 230, 240 on the GLD.
Yeah. Wow. Yeah, that'll make my heart go it'll make it flutter quite a bit to see it back at those levels. I've been trading gold since it became legal in 1972, and boy, I did okay with it through all those years. Anyway, that's neither here nor there. Let's move on to this next chart that we have, and we got to give you some time to tell the folks. You can tell the folks about your portfolio performance, because you should be extremely proud of this, especially in a bear market, Jeff. So tell the folks how well you've done here.
Yeah, since I was telling you about that idea generator lab strategy, so we started tracking it, just that idea, one idea a week, starting, I think, November 15th of 2021. So there's about 425 days ago. And we've put out about 50 ideas now, including yesterday's, or today's rather. And that's not included in this performance. But this is through yesterday's close. And we're up 25%, and the market's down 15% through yesterday. And we beat the market 40%. Now, this is totally unleveraged, and it's just trading stocks and ETFs, okay? We take no more than a 5% position in any given idea. And about 40% of our ideas are winners. The other 60% are losers, but they're small losers. Our average loss is under 5%. Our average gain is closer to 15% now. So, as long as we beat our losses on a 3-to-1 ratio, we're going to produce pretty good profits. And so, for those who are interested in trading, the ideas that we publish every Wednesday are worth your attention, I think.
I think so. Anybody that can make money only hitting 4 out of 10, man, that's really good. Of course, baseball players can't hit 400, but in stock trading, they shoot for 50%. But I think you had a really good month once when you only had 25% winners, and it was a huge month for you.
Yes, that's true.
Yeah, wow, that's what you like to see. Now, tell us about your monthly. The monthly newsletter is free, isn't it?
Well, yeah, it's free to subscribe, and you get a big preview. So, we do it in 2 sections. There's the economy and markets section, which is the first kind of 5 pages, and that kind of lays out the big picture, what's driving the economy, what's driving the market. And then we do our market outlook and analysis section, where we go through kind of a detailed analysis of the markets. We make a forecast of where we think the market will be over the course of the next month. Then we make recommendations of what you should do in your portfolio to capitalize on that or avoid risk. And that part you have to be a paid subscriber to get. But if you are a paid subscriber, you also get our top actionable trade idea every week as well. So, we encourage people to give it a shot. If you sign up for 1 year, it costs $120, so that's $10 a month. If you want to just go month to month, it's $15 a month.
Well, that's pretty good. Now, if the folks want to reach you, it's www.jwhinvestments.com. Is that correct?
Yep. Or you can find me on Twitter @alpha_insights. And, you can see our recent newsletter. We actually publish the newsletter the first Saturday of every month. So the next issue will be coming out on February 4th.
Okay. Well, listen, this is great. We're going to have you on again soon, so keep the great information coming our way. And don't forget now, pretty soon you're going to have your 2 days of summer, July 4th and 5th, so just be patient. I've been teasing.
Thanks, Larry. Yeah, I appreciate you reminding me of that.
Okay. Thanks, Jeff. If you see Rich, tell him I said hello, okay?
Absolutely.
All right. Well,
take care, my friend.
You bet. We'll have Jeff on again soon, folks. We're going to get ready to take another break here. Remember, tomorrow's guest will be Mike Moore of More Analytics. He's been on once 2 weeks ago when he was extremely bullish on crude oil. We had about a $7 a barrel run on that, so we want to see what he's looking for now, and especially his talk on how heating oil has been the leader of the pack. And I think that's something that I'm personally interested in, because when he showed me that, I went back and looked, and by golly, there's something to that. So we'll have him on tomorrow. Michael Moore, More Analytics. Let's take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, and we have Mr. Z from Philly on the line wanting to know something about natural gas, the March contract, and I'm hoping you can answer me, buddy, because why is it selling at a $4,000 premium to the February? Do you have any idea?
Oh, yeah, absolutely. The natural gas calendar curve, especially during winter and transitioning into spring, are always at highly different prices, merely because demand, seasonal heating demand is either high or waning or low. Larry, I just have to share this with you. First, thanks for the show and Jeff Huge. Second, of course, we're friends, and I am, if nothing but your loyal students. I've just posted in the Tiger's Den the past 7 days of the March natural gas futures hourly bar charts. And Larry, I see a clear potential butterfly to a bottom pattern, with a bottom potentially occurring right here, right now, today, this afternoon. So I just wanted to bring that to your attention. You can look at it in the in Discord in the Tiger's Den, and see that butterfly pattern that you educated me and a great many people upon in the past.
I'm certainly looking at it myself, my friend, because it certainly has some potential if it does fold up. We do know the risk on it will be small no matter what. That's the advantage of these patterns, that it gives you an idea of what risk control is all about, and that's what we have to focus on. And thank you for the compliment. I've learned as much from you as you have from me, maybe more so, but thank you for the compliment. I appreciate it, John.
Very good, Larry.
You bet, buddy.
To tomorrow's show, so thanks again.
You bet. Folks, we'll see you on the flip side tomorrow. Live every day in an attitude of gratitude, and may God bless.